Hello, and welcome to Your Estate Matters with your hosts, my colleague Greg Bernand and myself, Nicole Garten of Heritage Trust.
Your Estate Matters is a podcast dedicated to everything estates, including building and preserving your legacy.
If it's estate related, we'll be talking about it. We're having the conversations today that will help Canadians protect their families, their assets, and their legacies tomorrow. Julia, thank you so much for being here with us today. So tell us about yourself and your journey to your current role as CEO of Spring Planning.
Career-wise, I'd spent about 10, 15 years working through various investment firms, learning how to, do all kinds of jobs. I was a trader, I was an administrator, I was what they used to call a stockbroker, and I got my insurance license and all that kind of stuff. And eventually what I found is my favorite part of the whole thing was really talking to people and figuring out how to help them make really great decisions amidst all of these different complexities that they're having to deal with. And that's really where comprehensive financial planning fits in. And at the time, it was always this sort of add-on to, your investment broker's services. Maybe they do a couple of projections and be like, you're okay, and then we move on with our lives. And I felt really strongly that there's a better way to do that. So I ended up partnering with an accounting firm and starting what we now call advice-only financial planning. Sometimes people call it fee-for-service. So there's no AUM or sales involved. It's really just paying a professional for their time to help you make decisions.
For our listeners, what's AUM?
Oh, assets under management. So that's that if you work with an investment manager and they charge you a percentage every year.
Okay, great. And how does that relate to an MER?
Oh, yeah, that's different. So the AUM kind of looks at everything that you have in an account, and that your manager says, I'm going to charge you 1% or whatever. And MER is a management expense ratio. And so inside your account, say you have a couple of funds, the funds themselves charge the MER, which is the fee, and a portion of that goes to your manager. Okay. In some situations, the ones I don't love, the manager has both an MER situation and an overriding fee.
And so is there disclosure, like how do clients know what those fees are?
There is disclosure. It is very complicated and extremely hard to read. And I will say, too, for a lot of the advisors who are working in these systems, it's also hard for them to explain because of how the regulation works and what they're supposed to give people. And you're already signing 18 million forms. Here's another one. It's pretty tough to navigate.
Well, how has the transfer of wealth changed over the years?
It's been really dramatic. There's a couple of ways that it's been dramatic. One is big picture demographics, of course. We've got an aging population, and so there's just more transfers of wealth happening right now. But there's also people living much longer. Then they're thinking about transfers of wealth much earlier than it might ever happen, and not really considering how long they might potentially live. So that's kind of problematic. There's another kind of a cultural thing going on as well. So I would say, 10, 20 years ago, most people who were looking at transferring wealth would not talk to the transferee about it at all. This is what's happening. This is my money. You will take it or leave it. I don't care. And I would say now it's a lot more common for people to want to talk to the next generation, have a collaborative discussion. Does this actually work? Is the timing right? Are they well equipped? It's a lot more thorough, less authoritarian.
So how does that impact your practice, the graying of society?
Deeply. We're having more interesting conversations, and we're bringing more people into the conversation. And most people don't really have the training or skill set to navigate this. Those of us who went to school for technical expertise, I know what the Income Tax Act says, or I know what the law says, or those kinds of things. And yet our clients are coming in and saying, but I need to have a conversation Or they're not even saying that. They're just like, how do I do this? And being able to say to them, what we need to do first is have a conversation, because I've seen so many families absolutely implode from a relationship standpoint, despite beautifully elegant estate strategies that are just, they fit the Income Tax Act, the laws line up perfectly, but everybody's mad and nobody's talking to each other anymore. And everybody has seen that in their own families, and now they're saying, how do I not make that happen?
Right.
Is the challenge greater for the planning side or the conversation side for the blended family?
Oh, of course. Yeah. Because there's not only laws and all sorts of things that get in there, family law, estate law, and then Income Tax Act, and of course there's feelings, which are the biggest issue going on in the different families that have their own different sets of values that are trying to navigate this process together.
Right. And would you say there's different types of wealth? And if so, how would you classify them?
There are all kinds of different types of wealth, and I think most people tend to think about wealth in a family context about being, hard assets like real estate and financial instruments, and absolutely those things exist. But when we think about the wealth of the family, when you think about what's valuable in your family, you probably don't say, what, the most valuable thing in my family is the business my dad built. It might be a valuable asset, but the most valuable thing in your family are the things that your family have together. And it's very often things like our value system or our human capital. You might have a bunch of people in your family who are really talented and good at supporting each other in particular things. That kind of wealth is incredible.
Mm-hmm.
So we are both graduates of the Family Enterprise Advisor Program, right?
Mm-hmm.
And so they talk about that. And what are some of the other wealths? I think it's relationships, and is it philanthropic?
Yeah, there can be philanthropic, and then there's sentimental things as well. There's might be something that's passed down in your family for years. Like my grandfather was in the RAF, and he had some, pins and medals and that sort of thing. Those are incredibly valuable in my family. Like if anybody was going to go to court, it'd be about that.
So do you talk about those other kinds of wealth with your clients, and if so, how does that go?
Well, generally they get confused. A lot of times when I'm speaking to clients at first, they're like, I thought we were going to talk about my RSP. What are we doing here? But, I try to bring it into the conversation and talk to them about what's important to them first and foremost. Get curious. Who are you? What's important to you? And then when they sort of start questioning these other things that are coming along, I can bring it back to, but you told me that family harmony is so important, and that this particular component, your family cottage, your grandfather's medals, these were really valuable to you. So we can't ignore that in the face of all the other planning we're doing. So it's just about reminding people.
What would you call a successful intergenerational transfer of wealth? How would you quantify that?
It would be about how happy the people are at the end of the thing, that the relationships remain intact, and that the anxiety is reduced in the family system. And if that means that we lost a little bit of money to make that happen, I'm pretty okay with that, because the value of the family together, we can always make more money. Right? That's a real possibility. And yes, that can feel sad when we, maybe make that hard choice to lose this piece of real estate or that business. But the most important thing is the family stays intact and we stay together. It's one of the things that I think is hardest to do in our culture, which isn't really designed around multi-generational relationships. So it's like we're learning how to do this in Canada, even though we come from places where that's normal.
So Julia, can you chat with us about the shirt sleeves to shirt sleeves in 3 generations and how that manifests in intergenerational wealth transfer?
Yeah, it's this idea that basically the first generation makes money, second generation spends the money, third generation's got nothing, has to start all over again. And that is, there's a phrase for it in pretty much every culture in the world because it's so common. And really, I think what is happening in families, and I definitely saw this play out in my own family, from my grandfather to my father to my generation, where we're starting all over again. The person who started in the first generation who built the money doesn't have knowledge and experience about how to transition wealth because nobody transitioned wealth to them. And so they're guessing. And they do things like, okay, I'm going to send all my kids to the schools that I couldn't go to. I'm going to give them access to things that I never had because that kind of sucked. And I don't want people to have to do that again. But then we don't necessarily build the resilience and the talent in the next generation to carry things on because we don't have that knowledge and experience about how this works. And so by the time we get to the third generation, there really isn't any wealth to transfer, and there may be actually a loss of the talent and skill that got us to things in the first place. So if we can recognize that we know what we do know, and we don't know what we don't know, and try to find people who have skills, experience, theoretical training even around these areas to build that up in our families, we can surpass and get around that kind of 3-generation curse.
So it's funny because the statistics of business succession aren't great in terms of success. I think, what is it that most small businesses are going to transfer the next 10 years, but nobody's planning for it.
No.
But I think there's another side that says, is success necessarily transferring the business? Like if it's sold and then there's funds that allow the family to move on in a different avenue, that's not necessarily failure. Do you have thoughts about that?
Absolutely. Mm-hmm. So one of the things that I think is kind of interesting as going through the FEA program, and one of the few things I didn't totally agree with, and I've had conversations with the instructors about this, one of the things I didn't totally agree with is the idea that it is about one business that transitions from family to family. And I think that's a very North American perspective because we're a young culture. Mm-hmm. And so the idea that one business carries through and that's the family enterprise and we can do things like trim the family tree, mm-hmm. which sounds outrageous to me. That doesn't make sense to me in lots of ways because you can start with a business. Like my grandfather started with a laundromat. And this very surprising Chinese story, laundromat and then a restaurant. and he built out from there. And there have been some business assets that have transitioned through the family after his passing. They weren't the laundromat and they weren't the restaurant. But there is wealth and there is transitions. And some of the reasons why those businesses didn't transfer is because the next generation were not people who wanted to run a business like that. It didn't make them happy. But we still have generational wealth, generational acumen, and opportunity that we can pass. So the family enterprise is so much more than this one business. So
let's talk about immigration, because that story that you talk about, the grandfather, the Chinese Canadian that ended up starting a business, and I know my husband is the son of Greek immigrants that came with nothing and started a restaurant, and him and his brother are now professionals. Like, it's interesting that immigrants to Canada, their children actually have higher wealth and education than Canadian-born people. So what do you think is happening there? Are we too soft with our children?
I mean, I think part of it is that experience of the parent kind of coming from nothing, mm-hmm. showing up here with empty pockets saying, I got to get stuff done, and then saying, I don't want my kids to work that hard. And not saying necessarily, hopefully, I'm just going to give it to them. We'll be fine. Hopefully saying, I'm going to build this resilience. There's a wonderful Jewish family that I worked with, and, we talked about, there's historical grief and trauma throughout their entire family system, and they talk about it. And one of the things that the matriarch said to me is, almost everything can be taken away from you. Your passport, your wealth, almost everything can be taken away from you. We have proof of that. Mm-hmm. You know what can't be taken away? What's in here. And so we are going to invest in the education of our children because they will always do well because of that.
So I got some Viktor Frankl, Man's Search for Meaning going on here. It's getting deep, Julia.
Well, I think that leads to, does family culture and values play a role in this process?
It's the most important thing, and it seems like super woo-woo. Again, sometimes people come back to me and be like, I just wanted to know how much tax I was going to pay, and now Julia's asking me about my feelings. But it's so vital. I think a lot of times in our culture, we think that decision-making is purely rational, and the best way we can make decisions is by using numbers and facts. And the thing is that numbers and facts are always in flux. And human beings don't make decisions without emotion. As much as we can try to remove emotion from our decision-making process, that's always wrong. Our brains must engage emotionally with a decision for it to stick. So you can say, like, oh, my accountant says this is the most tax-efficient way to do whatever thing that we're doing. Sure, maybe it is. But what does that have to do with what your family wants and needs collectively and as individuals? We can have the most beautiful solution ever. It looks great on paper. All the numbers line up. Everybody's really happy and patting themselves on the back. And then we still have a situation where people feel disenfranchised. We have relationships that break up, people who didn't feel heard, or even people just won't follow this. You've created a great plan, but it doesn't resonate with me, so I'm going to go do something else. And especially entrepreneurial families. Entrepreneurs don't follow rules. They don't like them. They'll do whatever they want. This doesn't feel good. I'm going to do that. And they can even ask you for the most elegant solution, tell you that they're completely bought in. But 10 minutes later, they saw something cool. This sucks. It's gone. The plan's over. It didn't work. And now they think your planning sucks.
Yes.
And it did. It sucked because we didn't connect it with the values and the emotions and the meaning of those people. And unfortunately, most people who work in our professions were not taught how to do that. That's not part of the curriculum. So it's really important.
So I think we see that a lot. And I think we also see the wealth creator, which, societally has generally been the patriarch, the qualities that allowed him to generate the wealth. He was more of a command and control kind of guy.
Yeah.
And then trying to get someone like that to have EQ and look at things from a more holistic perspective, that's not always the easiest thing to do, is it?
No, it's pretty tough. But what I will say is that no matter what, that guy loves his family. And if we can find a way to connect with that love of family, and we can open some doors here and there and say, you really care about, this kid. You think they're super weird. And maybe you think they're not going anywhere in life, but you love them. How can we open some doors here for conversation and connection? How can we make this easier for them? And that can be a really long journey. And that's tough. That's tough for everybody because we want to take action. We want to solve problems now.
Yeah. So we have a lot of conversations with those wealth creators at Heritage Trust where the next generation is an artist or living on a Gulf island working in construction and so they want to impose a trust structure, sort of a command and control from the grave using a trust company, and we see the issues ahead. And so often partnering with people like you is really helpful to try to get more holistic, sustainable solutions for a family rather than imposing a structure.
I would say that those imposition and that command and control thing, what we do need to recognize is that comes from a place of fear. Mm-hmm. And if we can figure out what that fear is and speak to it, and find a way to create that psychological safety that person needs to just let go a little bit, can make a huge difference.
So wise.
Yeah, I think warm hand gifting versus cold hand gifting is better.
It is. And the people who are doing the cold hands, they do mean well.
Mm-hmm.
And that's the thing. Don Schooler, who I work with quite a bit, who's a wonderful professional in psychology, has said again and again, the behavior, even if it looks insane, whatever behavior somebody's engaging in, it makes sense to them. And if we can do a really good job of finding out why it makes sense to them instead of trying to convince them why they're wrong, we're going to do a better job of connecting them with the next step.
Well, what are some of the best practices to help prepare the next generation for success?
Oh, man, there's so many. I mean, and it always does start with, who is this person? And I think, again, we tend to impose these ideas. And one of the things I see again and again, and it's not wrong, is my kid needs more financial literacy. My kid needs to know more about money. And probably. But if it's not connected with the person that they are, they're not going to retain any of it. They're not even going to be interested. If you can actually get them to show up at the, session we've created, and maybe they'll fill out the quiz. Cool. All they're doing is checking a box for you. They're not doing something that's actually building strength and resilience inside them. So again, we need to start with the person that they are, what's important to them. How does this person see the next stage of their life? They're probably not seeing it very clearly because they're, young and they're not a fully formed human. But if we can work with the developmental stage of each person in each generation and try to get them to the point where they are doing things like self-reflection, understanding themselves, and then being able to articulate that to other people, we can build that resilience and strength so that they're ready to receive whatever our wealth looks like in a way that makes sense for them.
So what team of professionals might someone put together to help not just the technical piece, but also the family holistic piece that you're talking about?
Yeah, we can have a lot of people. I love having a counseling professional on the team. I have yet to meet a family that doesn't have some problems. I probably have, most of my families have said, well, we're a little dysfunctional. And I'm like, I don't know that I've met a functional one. There are mental health issues. There are addiction issues. There are physical health issues, all kinds of things going on all the time. And as wonderful as our relationships could be within our family, we haven't been taught how to professionally engage. And that's really hard. So if we can, bring somebody in a way that feels safe for them, because there's lots of people who are like, oh, you're not bringing in a shrink. I'm not crazy. So like, how do we do this in a way that feels safe for them? And things like building out communication courses, that feels very non-judgmental. And that's a big piece of it. And then, of course, I think it's important to have somebody like me who looks at things from the big picture and can see all the different professionals we might need. Of course, we need lawyers and accountants, and we might need professional business executives. We might need investment managers, real estate folks. It all kind of depends on what our wealth looks like and where we're going. Executive coaches can be super helpful. I work with Laura Barton quite a bit on that area. She's fantastic. So there's lots of people. I wouldn't say there's necessarily a standard for every family, but all of these people are out there and could be brought together in a team.
So when you say work with someone like me, do you mean in the context of a leader of a multidisciplinary group, or do you say in the context of a trained financial planner?
Both, sort of, yeah. Because, again, we're looking at decisions being made in a lot of different specialty areas, and the financial planner who's trained well is somebody who actually is like a doctor who's like your family doctor. I'm not a cardiologist, but I can tell when something's wrong with your heart. That sort of thing, I think, can be really valuable, because your cardiologist will always be like only looking at your heart, and you need someone who can see the whole body.
That's a very apt analogy.
What's the best way to initiate for a family to get the process started, or with the family to get the process started?
It's interesting because every family starts from a different angle, and that's one of the values of having family enterprise advisors who have come from a lot of disciplines. So a family might come to your team and say, we definitely need a corporate trustee. Somebody might come to their investment manager and say, we need help here. It the doors in are all over the place, but ideally what's happening is they're ending up connecting with somebody who is a family enterprise advisor who can say, oh, okay, I see where you're going with this, and I'm going to bring in some more people because there's different kinds of expertise that we need. I would say most families have no idea what they need, and they go to their closest professional, and they're like, I'm thinking this. Who are you? Do you do this?
Mm-hmm.
And can you speak to the fact that the dog shouldn't wag the tail, like in what happens with tax, for example? Like that seems to be a leading construct when, and I think you referenced it, these beautiful tax plans fall apart because the family hasn't bought in or quite frankly doesn't even understand the structure.
It happens all the time. The number of families that I've met where we've got, 16 different corporations, 3 different family trusts, and sometimes we have an accountant for each entity. And then we've got a personal one, and I'm like, oh my goodness, so do you know what's happening here? And they're like, no, the accountants will figure it out. And I understand that because a lot of times professionals speak this really weird language, and it's basically like they're speaking hieroglyphics, and you're like, okay, it's the right thing to do. I'm not going to go to jail, and I'm going to pay less tax. Sounds good. Right? And so what happens is we often leave the decision-making in the hands of that professional, and that professional is doing their best with the technical information that they have, and they're not asking the other questions. They're saying, you have asked me. I was talking about this with my assistant the other day. You go through a drive-through, you're like, you know what I need? I need a hamburger. Mm-hmm. The person on the other end generally is not going to say, actually, I think you need the fish. It's not going to happen. They'll be like, here's your hamburger. Would you like fries with that? It's very hard for service professionals to say something different. We want to do what people ask us to do. And so we do end up with this where you have somebody, and certainly in Canada, a lot of our wealthy families are coming from very blue-collar backgrounds, resource backgrounds, and they're walking into the office with the suit, and they're like, again, keep me out of jail, save me taxes. Right. And so they do that. They do all of those things, but it isn't necessarily the right thing for that family because nobody's talked about it.
In any of your planning with these families, the new structure, the fee-for-service model where you're, are you ever seeing any problems with the advisors they're using at the moment? And do you make recommendations sometimes?
Yes. As much as possible, I try to keep the advisory team that we have because relationships are important. Sometimes the client does come to me saying, like, I think this joker is messing up and I don't know how to tell. And that might be a little bit easier if that's exactly what's happening. But again, I would prefer to keep the advisors on the team that have been there. They've got history and they've got, relationships. It can be really important. But when things are going wrong or I can see a problem, my first step is to talk to that advisor. Mm-hmm. Because, again, I do believe that people are trying to do the best job with the information that they have. And so if I can go and talk to that advisor one-on-one and say, look, this is an issue I'm seeing. What am I missing? Right? Because you're the expert in your thing. I'm probably missing something. So tell me what I'm missing. What did you see? What did you learn? What information did you gather? Okay, here's what I have. And usually what happens, in an ideal situation, what happens is we work out a solution together because they've got 10% of what's right. I've got 10% of what's right, and we're working together towards that. If I get not that, which hasn't happened too often, I think most people are pretty collaborative, but every once in a while I'll get somebody who's like, I want nothing to do with this process, and you're wrong, and go away. Then I will go back to the family and say, look, this was the discussion we had. And it's up to you. What do you want to do next? Because I would say we're working with grown-ups. I don't care if they know less than me about tax. I know less than they do about gravel, right? It's fine. So I want to give them the information that they need and let them figure out how we're going to approach this in the right way.
As an independent trust company, we use generally the advisor that the family has. So that's one of the benefits of using us. So we end up working with a very wide cross-section of advisors across firms, whether they're independent or affiliated with big banks. And so we get to see a variety of fee structures, a variety of practice styles. But maybe I'll ask you maybe a spicy question, which is, do you notice that sometimes the really technically competent advisors that maybe really act in the client's best interests aren't necessarily the best marketers? And then people sometimes will have big books because they're great marketers, and then you can look at the portfolio and they may be churning account to generate fees, or the management expense ratio might be really high, or the results might be lesser than what might be expected. How do you stick handle that?
Well, I will say that I left traditional investment management firms for a reason. And that reason is not necessarily that the people in those firms are bad. I think a lot of people go into this field because they want to help people. But the structures of that system are not client first, and they are not advisor first. They really are about pulling as much money as possible out of the client as quickly as possible. And because that is the direction that these firms have built, I don't know if people are going to come after me with like stakes and fire now, but a lot of times what's happened, and not always, but a lot of times what's happened is the hiring has been salespeople. They hire people who are good at sales. So when I was first starting out in the industry, I definitely saw people being hired from, the futures shop sales floor, for real. Someone who's just selling stereos last week, 3 months later, they've got their mutual funds license and they're now selling portfolios. This is not a person who's actually well equipped to do this. And because the system is generally that you only learn about your job within your job, there's quite high walls. Those people don't know that they're not doing the right thing. This is what they're taught. And so we get these structures and we get these systems where, you can have a very genuine salesperson who feels like they're doing the very best things for their clients because that's what they've been taught is the best thing. And so absolutely I see that. And then I get the absolute superstar nerds, and I've worked in some pretty big firms and I've looked at people's portfolios, and by and large I have found that the ones who are maybe not as well equipped with interpersonal skills tend to be really great at portfolio construction. And some firms have done a really good job of recognizing that and creating systems that respect kind of the two skill sets. So I see that a lot in investment counseling firms where you have an investment and research team, and that's all they do all day. They never have to talk to people. They get to talk to each other about numbers and balance sheets, and they have a great time. And then they give their information to the people on the front lines who have the relationship conversations. And I think that works tremendously well. It speaks to people's skill sets.
So how can our listeners find you to learn more?
I have a website, pretty easy, springplans.ca.
Wonderful. Thank you so much, Julia.
Thank you.
This podcast is for informational purposes only and should not be considered individual legal, financial, or tax advice. Make sure to consult the advisor of your choice to advise you on your own circumstances. Thank you for joining us for this episode of Your Estate Matters. If you like this podcast, make sure to follow it on your podcast platform of choice.
Whether you are planning your own estate or you're acting as executor for somebody else's, Heritage Trust can help. Partner with Heritage Trust to protect your family, your assets, and your legacy.
If you would like more information about Heritage Trust, please visit our website at heritagetrustcompany.ca.
This podcast is produced by Podfather Creative.